Hi, Greg Walden here with the GMSR for Tuesday, August 25th. Today, we're going to talk about back in the saddle and being back in the saddle, and in terms of gold and silver. So, in this context, I want to give you a prelude about where the new big theme is, because this is really now evolving into something that I've begun to categorize in ways that are bigger than just the next leg higher, in a secular ongoing bull market in gold, because you're going to get a breakdown in the dollar. It's because the breakdown in the dollar is the key difference here. We've talked about how the first move in gold here to $5,000 was central bank buying. Okay, central banks selling treasuries, taking those dollars and buying gold, importing the gold, some future currency that's going to dominate world trade because China dominates world trade, so on and so forth, be backed partially at least by gold. And all these countries are getting ready for this, all right? Not wanting to hold reserves of dollars. Of course, we take that into account then in terms of where we are now, which is 40 trillion in debt, a government that spends twice as much as they earned in July, $1,104 for every person in the country, babies, people in the hospital, retirees, teenagers, employed, unemployed, doesn't matter. Every citizen, 334 million of us, all right, $1,104 each that the government basically borrowed from us, all right, to then go out and print the bonds that they're going to sell back to us. 40 trillion in debt makes headlines, but what doesn't make headlines and should is 30 trillion in debt that we the people own. It's borrowed on behalf of we the people. It's our debt, and then we own the debt, and we're getting a currency back that's going to buy a lot less than when we had the debt. Made the debt what it is. You add household debt, 20 trillion. U.S. households, public, holds $50 trillion in debt. It's IOUs, and it's all done by the government so they can spend twice as much as they earn. So this dynamic doesn't work, in perpetuity. It just doesn't. And you've reached the tipping points, and a lot of these things and all of these things, combine with a huge tipping point that is the secular picture that really provides into the dollar being the driving force here, and the move away from the dollar, where it comes from people in the U.S., it comes from wealth in the U.S., it comes from people that own stocks, that own bonds. I mean, people are petrified of the bond market, and while they can manage yield curve control can work. Japan's been doing it for years. At some point, it'll blow up. But before it does, it creates inflation. So, yes, you can rein in yields, but you're opening the box for inflation as if it's already open. You're unchaining inflation. So this is the problem in terms of bonds and in terms of the government, and in terms of borrowing and interest costs and all the things that we have right now that basically are all back on us as IOUs. Do we really want to hold IOUs against our IOUs that are $50 trillion? No. Would you rather hold gold against that? I think so. So this is where this movement will become much bigger. Much bigger. This is early stage stuff. It's the next big driving force in the precious metals, likely to take gold to 10,000. I mean, doubling where we just were in a bull market here like this, after we've had the perfect Fibonacci corrections that I've shown you, is within the realms of the probability curve that are not low probability. Not necessarily, a given outcome by any stretch of the imagination. If all assets collapse, that's always a possibility if they allow a debt deflation. But you have a war brewing between Rorsch, who is talking tough on inflation, seems to want to bring inflation down, invokes Paul Volcker, all right, against Besson, who is, doing QE with inflation well above target and a Fed funds rate that's not even 100 basis points positive on a real basis. That's really almost irresponsible. And what it is inflationary, which goes against what the Fed's trying to do. So either Warsh is working with them, which is a very real possibility, very real, or this is going to be the steel cage death match in the monetary era. Either way, dollar down, gold rush new, start your engines, gentlemen.